Hey everybody, Mike Scheid, Executive Director, Community Impact Fund. So excited that you're here to join us. We really do believe that credit unions are made to impact. And here at the Community Impact Fund, we're going to talk a little bit about who we are, what we do, and our mission. But that's really mostly a setup to talk then and offer some solutioning through giving credit and why we believe so strongly in what they're doing and why they do it. But to get there, we need to just remind for those of you that know us and then help you understand if you don't know who the Community Impact Fund is. What we do, because it really is very much in line with financial well-being for all, which I know as the credit union's mission. So we love credit unions. We work with hundreds of them across the nation. You'll see more deeply, there's a hand select few, 50 to 50 plus, that we work with very directly with our programs. And I'm so grateful for the opportunity to be a part of your network and a part of what you do, because we believe strongly in financial well-being for all. So with that note, here is, you can see our mission and vision. So our vision is that everyone has a path to financial freedom, and that kind of outplays in our mission where we partner with mostly employers. And so typically when we're talking to credit union, it's around your employee work. It's around what you do with your employees to empower Alice individuals toward financial security. And so if you've never heard that term Alice before, we'll get to that in just a second. This is just a snapshot of who we are. We actually started in 2018 as a food assistance app, bringing technology and dignity to one family's need over the holidays for food and another's family's ability to provide it, but in a dignified way to where the family in need isn't broadcasting to the whole community that they are in need, and offering technology that brings dignity to that equation. We learned a lot from that experience, actually morphed into a granting program. So instead of just offering food assistance, we then started offering actual grants or dollars to people. And what we found in that was that oftentimes when somebody received a grant, as soon as they were eligible, they were applying for the grant again, and we weren't seeing financial progress, financial well-being as a part of that program. And that's when we shifted in early 2021 to our lending program, where we offer small dollar loans for some kind of financial wellness need. And we'll explain what that is in a second. But we've done since then over 3,000 loans, 6.8 million in small dollar loans. We have 56 partners across 20 states in our lending program, and it's super exciting to see the growth, all of that. And many of those you'll see here in a second are actually just credit unions offering that to their employees. So ALICE is our target, our focus. So ALICE stands for Asset Limited, Income Constrained, but Employed. If you haven't heard about that before, I'm guessing a lot of you on this have heard of that, but it was coined by the United Way, I believe in 2014, but it's people, it's almost half of the US households living day paycheck to paycheck, often with negative cash flow, little to no savings, 25% of their income servicing debt. All of this is a big piece of what we try and service and the way we offer direct cash assistance in those through these small dollar, no interest loans. But it's also a big piece of there's in our economy, what we're talking about today is credit. And when you have our three credit bureaus, which serve a great purpose, but that often turns into there's the haves and the have-nots. And more often than not, Alice is in the have-not category. And so as our focus is on Alice, we want to offer them and help them with credit. And we'll talk about how we do that here in a second. So this is our main offerings through our programs. The big one there is our no interest loans that offers financial education and builds savings all in one platform, mainly through employers to their employees. Sometimes it's to nonprofits that they support, or if it's a housing program, it could be to their residents. Really cool stuff. And then we have a couple of, in addition to the impact loan program, working with credit unions, very specific to credit unions in the field of membership and charitable donation accounts. And so we're adding to that this partnership that we have with Grieving Credit, and you'll hear about that today, but we'll kind of explain each of these real briefly. So this is kind of our impact loan snapshot. What is our program? It's a no interest loan, flexible payback with manageable terms and a quick payout. We're really trying to offer a solution for individuals to keep them from, one, putting it on a credit card at super high interest, or worse yet, going to a payday lender or doing something that's really going to harm their financial outlook and their future and start that debt spiral in a way that they just can't get out of. And so we offer a dignified solution. That dignity comes in a couple of different ways. It's first and foremost, it's through anonymity. In other words, the employer doesn't know who's received a loan. We have some great pieces in place so that that employee, instead of having to put their financial woes out to their boss, or worse yet, a panel of their peers, they can come to us, a 501c3 neutral nonprofit third party, share their need and get support without having to put that in front of all of those in their community. That's that dignity that we talked about that we were solving for when we were first that food assistance app. It also protects dignity in the sense that we really believe that a loan is a more dignified, often, solution than a grant. When you are receiving a grant, you are the recipient of charity. That's the way it is. You are a recipient. And in our program, we like to say that you are a participant in a program, because when you receive the money from us, it helps you with your immediate need, and it spreads those payments back to us in manageable, flexible ways so that you can manage that and still do it. But every dollar that you repay on that loan is a dollar that goes to somebody else in your community. And so every dollar you repay on your loan is a gift back to the community. And it's oftentimes one of the few ways financially a person in that situation can give back. It builds savings, sustainable impact, and engages your employees. The ROI on it as an employer is huge. We have a whole other conversation, but that's not why we're here. We're just telling you a little bit of context of why we so firmly believe in what Giving Credit is doing. Here's just a list of our current credit union partners that are impact loan partners. So in other words, they've donated to us an amount of money that we turn back around as a direct benefit to their own employees in the form of those 0% interest loans. If you know any of these or would like to talk to any of them to hear about what their experience has been, love to make contacts and help you with that. So I'm going to let Courtney talk a little bit about our two other credit union specific programs. Courtney is our Vice President of Impact here at the Community Impact Fund. So take it away, Courtney.
Thanks, Mike. Hi, everyone. Glad to have you here. So another exciting opportunity for us and for you in these credit union relationships is expanding your field of membership through an open association. We have the privilege of now being a qualified open association organization that you can add to your field of membership to expand the scope of where prospective new members can join you. So through a multiple common bond, you are able to add us into your field of membership, and thus any members across the United States, if you so choose, are eligible to become a member of your credit union once they become a member of our financial education membership program. So again, you come and pay annual dues, so that allows you to enroll an unlimited amount of individual or organizational members into your field of membership, your credit union membership, and you get the benefit of offering them an extension of what you're already doing, deeper financial education benefits through our monthly financial education newsletters, our quarterly webinars that are provided on behalf of our partner Trust Plus, an excellent financial coaching organization that is part of those resources, and access to our financial education membership portal. So really exciting opportunity if you have in your strategic plan this year or next to expand your field of membership. We'd love the opportunity to speak with you about that. Next slide, Mike. Currently, these are our credit union partners, our association member partners where we are in their field of membership. So definitely excited to be offering that. Another benefit is that those who are coming through our impact loan partnership programs, as well as other streams of CIF members are also eligible to become members of our CU Association credit unions. So our credit union association members. So we're really excited to have that other added benefit to our membership at large.
Very good. Okay, Courtney, I think I can take this one, or do you want to explain it
Oh,
real quick and then I'll,
I was gonna jump in
yeah.
really quick. So this is not a program that we offer directly, but we love to bring it to awareness to our credit union partners. If you do not have a charitable donation account, a CDA, it is one to look into. It is certainly a charitable superpower. It's a unique investment portfolio approach that allows credit unions to invest up to 5% of their net assets into normally impermissible portfolios. These portfolios are year over year able to produce a higher return on investment. The caveat is that 89% of that, 51% of those returns are going back out into the community through your charitable gifts over 5 years. And so not only do you get the benefit of having more money coming into your organizational budget through a higher yield, you then have more money to do charitable work in the community. Why do we talk about this? As Mike highlighted, our Impact Loan program is a charitable gift from you to us in order to bring that program to life. So dollars from these returns from this particular portfolio can be utilized if you'd like to start your community investment fund and certainly keep it going while also deepening your relationships with the sponsorships and grants you might already be doing in the community. Acumen Financial Advantage is an affiliate partner of ours who is an expert in this space, and we'd be happy to introduce you to them if you're interested in learning more.
Yeah, thanks, Courtney. And I just, whether or not you use a charitable donation account to set up an impact loan program is not why we tell you this. Credit unions, your mission is financial wellness for all. And this is something that the NCUA has set up for you. If you're a federally chartered credit union, that you can take advantage of, where you actually can make more money on the same amount of money that you invest. But when you put it into a charitable donation account, you should have, through that higher yield, more money. And then you unlock that same amount, 51% of that investment has to be given out to charity. Please do this. The charitable organizations across the US need you to do this. You can superpower, it's your superpower to charge the missions that are happening across the US. So please, if you haven't done this, you don't know about it, look into it. So this is to set up really an important piece of why we're here today. So as you can see, we have these 8 core values: embrace community, respect dignity, meet needs, collective impact, live with intention, never settle, for all, and do no harm. It's that do no harm one that I want to really highlight, because of that specific core value of ours, we made a very conscious choice from the very beginning of our lending program to not report to the 3 credit bureaus. I'm not saying there's anything bad about them, but what we figured, what we know is we can't report just the good and not the bad. And if we do, we could actually do harm to somebody, because our loan is so flexible and it has these very key and vital to the success of our program built in abilities for people to change around their payment, to do partial payments, to be deferred, to have an extended time of repayment. Our goal isn't just to get the money back. Our goal is that they have financial wellness. And to have that flexibility, we couldn't also report to the credit bureau in a way that made sense to also have it be a credit building loan. And so we've often been asked, hey, is your loan a credit builder loan for our participants or for our employees? And we've, up till recently, had to say, well, no, it hasn't been. We're not able to do this. But in our partnership with Giving Credit, we're able to now offer an alternative credit building solution. And we want as many banks and credit unions across the nation to accept this as a reasonable addition to their underwriting. And so I'm not the expert on all of this, but we have the expert here with us. Her name is Ashley. Ashley is one of the co-founders at Giving Credit. And so we are so excited to have Giving Credit as a part of our program. And the way it works from our side, before I hand it over to Ashley, is all of our participants, after they are finished with their loan with us, receive notification that if they would like to opt into an integration we have with Giving Credit, they just have to accept the invitation, and then our system on the back end sends their loan information to Giving Credit so that it can be used in the systems that Giving Credit has set up. And so I'll let Ashley talk eloquently about all of the things that Giving Credit does. So thank you for being here, Ashley. We're so grateful for Giving Credit and what it means to our program.
Yeah, thank you so much, Mike and Courtney. What an intro, and I think you are underselling yourselves. We are also very big fans of the work you are doing for a lot of reasons, but the work that you're doing at the Community Impact Fund in honoring dignity, not doing any harm, and offering a truly non-extractive, affordable product is absolutely unbelievable. And we're just grateful to be in partnership with you all and part of that small offering that you are from a credit building standpoint. So just to anchor ourselves a little bit, I always like to start in storytelling. So I'm one of two founders at Giving Credit. Both myself and my colleague David, we've spent our careers in the sort of financial health, financial inclusion, economic mobility space, but at social impact nonprofits. And we've always seen ourselves at this sort of this intersection of financial health, policy, and technology. So we met each other when we were on the executive team of a national nonprofit. At that time, we had built the technology and scaled the organization to deploy cash transfers, so grants, as Mike mentioned, which is one solution. And so we deployed about $250 million out to hundreds of thousands of low-income individuals, oftentimes in small one-time cash transfers in the amounts of like $500 to $1,000. And we saw a really important insight that led to the beginning of Giving Credit and our alternative credit reporting system. And that was Mike might receive a cash transfer and he invested in his own family and the needs that they had. But then we started to see Mike lend that money out to his family and friends. And at scale, we started to see the hidden banking networks that exist in community and what we now call social credit networks. It also echoed the personal experiences of both myself and David in the way that we grew up, especially David as the son of a Panamanian immigrant. So I always also like to say that that's our origin in the beginning of the work and sort of seeing the peer lending and this banking network that's happening. But let me set the stage a little bit on our problem and what we're trying to solve. So Mike, if you want to go forward. So all of you watching this and here today probably have a really good understanding of the problem, and Mike mentioned it, but at our core, the credit system in the United States was designed to be exclusionary. Mike said it really well. It gives some people access and some not access. So we know that we have 45 million people in the US who are credit invisible. People who are Black people and Latinos are 2 times more likely to face that level of exclusion. And then on the other side, we have an alternative financial system that extracts from people at astronomical rates in the 400%. And we know that $9.1 billion is extracted from payday lenders annually. Go ahead and flip. But what we do know, and we saw that in that story I told in the beginning, is that when people are faced with exclusion, they engage with one another. So they're lending and borrowing. It's a behavior that we now call community finance. So we know that 90% of low to moderate income individuals, or those ALICE households, are borrowing from their friends and family. They're participating in these hidden banking networks. We also now know that that the U.S. holds over $200 billion in this peer-to-peer debt. And if you contextualize that for those in the financial institution space, that's about 20% of the value of the credit card debt in this country. So we have a significant amount of money that's being exchanged among community members. And then when you layer in your employer and the lending that happens there, and your nonprofit or the church, there's this immense market in this community finance space. So every single day, people are repaying these community-based loans and showing their credit reliability. However, they are hidden. They're in these hidden networks, and they are often, if not at all, reported to the mainstream credit system. And that's the gap that we're trying to solve. So Mike, you want to hit the next one? We also then just firmly believe that if people are actively repaying loans, that we need to see them for who they truly are. So if you look at the history of the credit system, credit used to be almost entirely based on your character. Now character is only one of the 5 C's, and honestly probably isn't very able to, it's very hard to contextualize character, because today credit is really determined by all those exclusionary algorithms. But those exclusionary algorithms are missing really critical data on people's true financial reality and their credit reliability within community. So our credit report, which I'll talk about here in a few minutes, is designed to make sure that your true character and how your community sees you is truly evenly distributed. Go ahead, on a flip. So what are we? What do we do? Giving credit, we often describe ourselves as the Experian or the Equifax or TransUnion for community finance. So we are focused on building out a FCRA compliant credit report that aggregates all of these hidden financial signals, and then making sure that that report can be used for underwriting to expand access to affordable credit. Go ahead, Mike. So today we are a fintech. I often describe ourselves as a marketplace. On one hand of the marketplace, we have consumers. We have the low to moderate income, ALICE households, everyday hardworking individuals that join Giving Credit. And through our technology, they're able to build out the Giving Credit report. They do that by providing self-reported, uploaded statements or using our app to actually make peer loans. And then in addition, organizations like the Community Impact Fund is able to report any other loans to their report. So they build out this Giving Credit report. And then on the other side of our marketplace is we work with partners. And so we have a group of financial institutions, community banks, CDFIs, credit unions who all commit to using the Giving Credit report and the signals of character and community lending that we have in their underwriting. It is not meant to replace the mainstream credit report or replace your current underwriting practices. It is truly meant to be an additional data set to help you say yes to more people and get those interest rates down to the lowest that you can. So we want to go to the next page. Tell you a little bit more about our credit report because it is really different, as Mike mentioned. The features on our report is that our report looks pretty similar to an Experian or Equifax. You're going to see trade lines and credit utilization and all those things that you're used to looking at. But the difference is that we are focused on capturing that lending and borrowing among trusted networks. So Community Impact Fund is a trusted network, your employer through the Community Impact Fund, as well as your peer lending. We're working on evolving our report to cover some of the other 5 C's of credit, things that are often asked on loan apps that we can get access to because of the trust we build with our members. Our report is character-based. And so we are always taking a very do no harm approach, just like Mike is. And we're very focused on how do you elevate someone's character and how their community sees them over maybe their wealth or their race. And it truly is a reflection of a person's character based on how their friends and family and their community affiliations see them. It is also consumer friendly. So we don't have any confusing algorithms or numbers. I always say I have zero idea what the difference between like a 602 and a 622 credit score is. And the truth is nobody really knows what the difference is. The report is complemented by a quote unquote score, but our score is super simple. It's good, neutral, or bad. So we're really focused on, are you in good standing with the people who you are borrowing from? Additionally, our report gives consumers complete control over who sees their report. So a credit union cannot pick up the phone or join our platform and give me a social security number for Mike and say, can I see his Giving Credit report? Instead, Mike has to exclusively permission that report over to that credit union. We believe full-heartedly that one person's data, especially when we're capturing things like their peer lending data that's done fairly informally, that they own that information, and they should decide who sees it and doesn't. And then lastly, we are fully compliant with the Fair Credit Reporting Act. So this provides all of you verified credit data and also the confidence that you can make some underwriting decisions against it. So Mike, if you want to flip forward. So we offer a couple different partnerships for our credit union members, all focused on how can you use our report to better assess credit risk and then obviously get more members for your credit union and in your products and services. So we have a marketplace. That's where we do lead generation. On the right-hand side, you can see a sample of that marketplace offering. This is where we list geolocated to one of our users' location that your credit union is a credit union that will use the Giving Credit Report. And we send them directly to you, whether that's to your website or to more information or directly to the loan application. And then all we ask for you all is that you commit to pulling and using the Giving Credit Report as a part of your decision making. The other way that we're working with a lot of credit unions is actually in second look underwriting. So think about all of those folks that you've denied who fell right outside that credit risk threshold. And if you just had a teeny bit more information on them that would prove their reliability or prove their character and prove their ability and willingness to pay, could you have said yes to them? And so we offer a second look underwriting where you send your denials to us. Those folks are able to very quickly, within a day, build out their Giving Credit Report, even looking historically. And then you're able to look at that data and see if you can take a second look at the application. Okay, Mike, a couple more here. Thanks. Lastly, you can also furnish data to us. So that is the way that the Community Impact Fund is partnering with us. So I'll talk a little bit more. I know Mike mentioned it, but if you make loans to people who are on our platform, who might want to be on our platform, you can furnish that data in the same way that you may or may not furnish it to the mainstream credit bureaus. What that does for your members is it gets them introduced to Giving Credit, gets them at least one trade line on their Giving Credit Report, and then allows them the exposure to be able to build out all this other alternative-based data that Experian and Equifax is missing. For our partnership with the Community Impact Fund, Mike mentioned this, that it's really anchored in how do we do no harm. And that Mike and the team at CIF were never able to report and have any of their loans be credit building. And so as he mentioned, now all of their borrowers at the completion of their loan can opt in. They join Giving Credit, and then we automatically pull that loan data, successfully creating that first trade line on the Giving Credit Report. And that loan then becomes not only a payback, but also now is credit building for them in the future. And then they get the full suite of the Giving Credit products and services. And just quickly, we're very, very fortunate to be backed for the next 2 years by a grant from the Robert Wood Johnson Foundation. That grant's really focused on bringing in a small number of credit unions and financial institutions to really pilot and work with us on underwriting and really prove out the impact and predictability of this data set. Because of that, we're able to offer some discounted and waived pricing because of the Robert Wood Johnson Foundation, but also because of the partnership with CIF. So we typically charge a platform subscription. We are discounting that to $100 a month, and we'll waive the first 6 months of that. That will get you inclusion in the Giving Credit Marketplace. And then after that, we just charge $2 per credit report view. And that's billed monthly. If you want to furnish your data to us like the Community Impact Fund is, there's no cost to furnish data. So open to all of those conversations as well. At the end of the day, we are looking to bring on super early adopters to try this work, to pilot it and think about how the data can augment and get more people access to affordable capital. So if that's what you are interested in doing, I'd love to talk to anyone about how we can design something together. I'll pass it back to you, Mike.
Yeah, thank you. Well, we'll conclude here and keep this short and sweet, but we're so grateful, Ashley, to have you as a part of
Yeah.
the Community Impact Fund work that we get to do. It does really solve for something that we've known is an issue that we would love to have. And because of our do no harm core value, we just chose that we couldn't do it, and now we have a way to make that happen and still uphold our core values. So thank you for that and that willingness to partner with us. If you have any questions, if you need anything from any of us, here is each of our contacts information. Courtney, Mike, Community Impact Fund, Ashley giving credit. Super easy to remember. So please join us. Please call us. We're so grateful to be on this mission together with you. So again, thank you for being here. Thank you for listening, and we will see you again soon.